In fact, the Sharia S&P delivered 48% more returns, better returns actually, compared to the conventional. ETF Explorer is meant to serve these people who just want passive exposure for the long term.
More like a personalized offering for them. How is this reshaping your value proposition as a digital investment platform here in Malaysia?
Especially with US now kind of retreating a little bit in terms of their interest, you might want to invest more in defense stocks, right? The average Singapore investor who invests in Shariah Global Portfolios is many times more affluent than the average Shariah Global Portfolio investor in Malaysia.
Hi there, welcome back to KleverStock. My name is Wan Izul Islam, and today for our feature corporate interview, we have Mr. Wong Wai Ken. He is the country manager for StashAway. So let's get this started. Before we begin, of course, we'd love for you to briefly help the audience get to know you a little bit better, So not only you, also your company, do give us a quick introduction.
Great, thanks Wan. I'm so glad to be here on the show. My name is Ken, I'm the country manager of StashAway Malaysia. I was employee number 1 7 years ago to establish StashAway in Malaysia. And as the first robo-advisor in Malaysia, what we do is we manage people's money. You download the app, you pick a product according to your risk level, you deposit some money, and then we grow from there. I think the whole company was founded and launched on the basis that Malaysians need to grow their money. Of course, there's different offerings out there. There's unit trust, there's ASB, EPF for your retirement and all that. But a lot of it seems to be very Malaysia focused, right? Very domestic focused. Also, the unit trust offerings can be very high in fees, so 5% sales charge, 2% management fee. And of course, the products that they were invested in were relatively generic, and the advice that came from it was non-existent. So what we really wanted to do was give you something smart and affordable which invests your money globally. So 7 years in, now in 2025, I think we have a really strong, comprehensive suite of products. Whether you're looking for something conventional, something Sharia, for your cash, for your wealth. And we are the largest robo-advisor in Malaysia, and I think that speaks volumes of the need for people in Malaysia to grow their wealth.
Fantastic. So you did mention a little bit about your Sharia, and that's one of the key things that caught my eye as well. It's been a few months, I think it was in August 2025, you guys launched Shariah Global Portfolios, okay? So how has the market reception been so far with regards to this, particularly among Malaysian investors, of course, seeking faith-compliant options?
We are very proud of our Sharia offering. From the start of StashAway's launch, it's something that I have been pushing for internally. As a Malaysian growing up here, we all know that Malaysia is the world leader when it comes to Islamic finance, Sharia investing. We took a while because globally, maybe not news to you, but it's actually very hard to find Sharia ETFs. So finally, the market developed and the demand grew globally, and then we are able to kind of put together a portfolio that really reflected what we care about at StashAway. We didn't just want to have something that was a Me Too product. A lot of unit trusts, a lot of digital platforms have Sharia equivalents, right? So that's not new, but what matters to StashAway is the portfolio is really global, and also it's managed by our proprietary framework, meaning we can change your asset allocation depending on where we are in the economic cycle. So we didn't want to just put out something that was okay. We wanted to put something out that met our high standards, and because of the emergence of like Sukuk ETFs, which previously didn't have, and other kind of Sharia ETF, we managed to put it together. And we tried to also be very aware of how this Sharia product would complement existing products that Muslim investors already have. For example, ASB is a really big one. So we didn't just want to go out and say that here's something that gives you 5%. Buat apa 5%? ASB pun ada, right? So we launched something that gave you more than 5% returns, at least from a historical performance standpoint. So our portfolios give you between 8 to 13% per annum over the last 5 years, annualized. This is back-tested returns. We just launched in August. So we had to see some sort of like indicative track record lah. So we aim for something that gives you more than 5-6%. Coming to the reception, we were very nervous as well. It's a crowded market. very competitive. As I mentioned, ASB is a huge mainstay. So when we launched, we tried our best to go on different media channels, including this one, to tell everyone that we have something that's global. Hence the name, right? Shariah Global Portfolio. Our users has really picked up. Our users have doubled in terms of signups. We think this is because of really clear product market fit. People have wanted to invest in Sharia, especially on a global level, because interest in global markets have really gone up, especially since COVID, right? Rubber gloves, meme stocks, S&P doing really well. Last 3 years, gold did really well. So people want to participate globally. So we, again, coming back to this, we didn't want to just have a Sharia product that is domestically focused. We wanted to have something global. So I'm really, really glad to say 2 months in, we are now seeing a growing segment of Malay investors who want to invest according to their faith. And that number continues to grow. We just want to nurture these clients because we think it's a journey. The start is just a start. The journey is important because markets are volatile, and right now, markets are, depending on which index you look at, they're near all-time highs. Inevitably, there will be some volatility, might be a bit of a bear market because of a recession or inflation coming back. Whatever it is, the Shariah Global Portfolios will try and be resilient and will be there for you in terms of communicating what's going on in the market, not just acquiring customers and then that's our job,
So it's safe to say that the investor response has definitely met your expectations for this global portfolio. And also not only that, but you did mention about the user growth, and one of the biggest takeaways, of course, is the engagement. Now, in your personal opinion, these portfolios, Sharia portfolios, compared to that of your conventional offerings, the Malaysian market specifically, which one are they going towards? Is it more towards Sharia portfolios, or do you still see people still taking up your conventional offerings more towards your Sharia?
Yeah, I think the conventional portfolio has been there for a long time. So we are seeing a normal kind of participation in this. We acquire customers that invest in our other global portfolios, but the Sharia portfolios are new. So you're seeing a new segment that have been kind of holding out on investing in StashAway. So we're seeing much more growth there. So I think it will take some time for the Sharia segment to really catch up. In terms of appetite, which is the spirit of your question, I think there's a segment that cares about faith-based, and there's a segment that cares about returns. Of course, there's some sort of internal debate what you should try and maximize. But I think I'm very happy to say that actually the Sharia performance holds up compared to the conventional. You're not talking about less returns for the Sharia portfolios. In fact, when we look at some of these ETFs that make up the Sharia portfolio, there is a global equity ETF, and we compare that performance to the conventional one, both ETFs, right? In the last 3 years, both delivered 9%. It's the same. And then moving on to another set of ETF, which we did compare, is the conventional S&P and the Sharia S&P. In fact, the Sharia S&P delivered 48% more returns over 10 years, better returns actually compared to the conventional. So we think there's something to do with the exclusion of prohibited industries, the exclusion of over-levered companies, the exclusion of certain banks that lead to this outperformance. So we think that Sharia investors don't need to think about sacrificing their returns. So we're quite happy that they stack up in terms of performance.
That's good. That's really good indeed. So now we're going to be moving on a little bit away, not away in particular from Sharia Global Portfolios, but we want to know what's making the changes for StashAway. So I've been told that StashAway, they recently rolled out the ETF Explorer. It's a transactional model that offers more flexibility to investors. And, maybe you can tell us a little bit about how this feature, it fits on, your broader strategy to democratize that of investing in Malaysia.
Yeah, really good question. I'm glad you picked up on that. So ETF Explorer is our newest product launch. And this really came out of something we observed with another product that we launched previously called Flexible Portfolios. So when we first launched, we had managed portfolios, we have a cash offering, then we launched flexible portfolios to give people more control. You can build your own portfolios using our ETF universe, and there's a segment of intermediate and expert investors that want this. But we saw some behaviors that led us to think, is there more to this than meets the eye? So the thing that we saw was that a really big segment of these flexible portfolio customers were only investing in one ETF. So they're not really looking to build a portfolio, they're looking to choose one ETF, let's say gold, let's say S&P 500, NASDAQ for example, kind of single exposure, and they want to invest for long term, and they want to DCA or dollar cost average, invest regularly into these ETFs. If you're familiar with Vanguard and Jack Bogle, the founder who has passed, the act of kind of long-term dollar cost average is called being a boglehead. So we saw these bogleheads, and we thought to ourselves, surely there's a segment between those that like funds or portfolios and those who like trading stocks. I myself don't trade stocks. At the best, maybe I would buy and hold some crypto for a very long time. But I'm not a stock trader. I don't trade daily or weekly or even monthly. So there should be a middle segment here that wants passive exposure, diversified across different stocks, diversified across different bonds, to invest for the long term. So that's what that's what ETF Explorer is meant to serve. And why did we change from percentage of your AUM or management fees and change that to transactional pricing of $1.99 US? That is really because we want people who do this long-term investing dollar cost average to get the most out of their money. So if you're only investing in S&P for let's say 10 years, you're not really getting a portfolio that StashAway is managing. So where's our value, right? So we didn't want to charge a management fee for these single ETF users. For example, if you invested 1,000 in the old model with the management fees, 1,000 means that you pay 80 ringgit a year lah. But if you use ETF Explorer now, when you buy, it's 199 or about 8 ringgit, right? When you sell, it's another approximately 8 ringgit. So that's far less than what you would have paid if you were in our old model. So we recognize this. We want to be fair to customers. We also talk to a lot of customers, and this was, pricing was one of the main things. And if I could just end with this kind of observation lah. A lot of people may think, why don't I just find these ETFs on a trading platform, a digital trading platform, like Interactive Brokers or something like that, right? So to that, I would say that if you're a stockbroker, if you trade stocks, you want to optimize for cost. Of course, go and use these discount brokers, these digital brokers. They're a very good offering. And of course, you can trade ETFs as well. But if you are mostly a passive investor for the long term, you don't want to be offered 5 different ETFs covering one index. You don't want to be offered stock idea after technical charts after technical charts across thousands of stocks across many different markets to distract you from long-term investing. So I think it's a very different mindset, behavior, and therefore market. So ETF Explorer is meant to serve these people who just want passive exposure for the long term.
More like a personalized offering for them.
Yeah, I would say something that really serves their needs and their behavior. Even though you could go, let's say, to the supermarket to get fruits, right? There's so many fruits to choose from. If you know what you're going to do already, you can go to the Dusun, have a lovely day out, and eat what you want to eat. That is the same thing. You're still eating fruits, but it's a much different experience, right? So I would say that we are going we're trying to target a different kind of market here.
Mm-hmm. Okay. The competitive edge is there, definitely, but from a product development standpoint, like how is this reshaping your value proposition as a digital investment platform here in Malaysia?
Yeah, so I think that's quite a nuanced question, because that comes back to what is the platform for? What does it do, right? So normally fund managers would have funds, they would have portfolios, sometimes, in the traditional sense, it'd be like Malaysian equities, Malaysian bonds. Then I think along the years, they started offering things overseas. Let's say China was very hot there for a while in the 2000s, right? So China funds, then over the last few years, India funds, tech obviously is a big theme. So what I'm trying to say is that the unit trust industry is really good at launching disparate funds that target specific themes or flavors, which I think is the wrong approach. The right approach is to have a portfolio that's diversified so that you capture growth wherever it may be, and you don't have to do this constant, search and shopping for the next best thing to rotate or switch your money into. Rather, you can just stay put in 1 or 2 portfolios and let that be your investment vehicle for the next at least 3 to 5 years, right? So that is what a fund manager should do. As a digital company, we have much more advantage when it comes to being nimble and adaptable when it comes to our product. So when you have something like flexible portfolios, where you can even build your own portfolio using the ETFs that we have, that's innovative. That doesn't exist anywhere else in the market. And then moving to ETF Explorer, where we target people who just want to invest for the long term in 1 or 2, maybe even 3 ETFs. It's a slightly different proposition. Our value add is, I would say, a few things. The first one is we choose the best ETF to represent that asset class. Sometimes people think that it's easy to just pick a ETF, but there's other considerations beyond, say, cost, liquidity, and all that. Let's say there's things like taxes. Let's say if you invest in the US, there's withholding taxes. So we might curate something based in Ireland under a different tax structure that gives you ultimately more returns. And then we have to compare that to how it really tracks the index itself to see that it matches really well. So you ultimately get a better total return, all said and done. It's not just to say all these things to be clever. Ultimately, it's about getting you good returns. And then it comes to other kind of different things like gold or even US dollar exposure. Taxes come into play, currency comes into play. So we curate this for you, which is the first thing. The second thing is you might want to invest in a few things. So if you want to go have a diversified portfolio that we offer, great, all well and good, invest in that for the long term. Then you speak to your friends, you read the news, you read Bloomberg, you listen to KleverStock, and then you think, I might want to invest in a specific theme. Let's say, AI is very obvious, but let's say something like European defense. This is not in the fringe of things, actually, because of the Ukraine war, spending of defense industry in Europe, especially with US now kind of retreating a little bit in terms of their interest, you might want to invest more in defense stocks, right? Not Sharia compliant, but some people want to invest in that. So then you can have your multi-asset portfolio, which is very diversified. Then you want to go into specific themes like defense, or maybe you want to go into uranium because all this AI is going to take up a lot of energy. You've probably heard of things like energy crunch, and building new power plants is not easy. Nuclear provides an option, especially in certain jurisdictions like the US maybe or Japan. Then the price of uranium should be doing well. So all these smaller, more esoteric themes you can also get through ETF Explorer. So ETF Explorer and our managed portfolios, all that will mean different things to people, and ultimately you can do that all on one platform. So that's the idea.
Sounds to me like a Google for ETFs. But very nice indeed. Now we're going to be talking a little bit about your ambitions and of course long-term vision. Okay, you've got so many product offerings being rolled out. We know that Malaysia led the development for Shariah Global Portfolios. You mentioned that earlier. So StashAway Malaysia, or StashAway in general, are there any plans to expand these offerings not only into other Muslim majority markets in Southeast Asia or Middle East? Do you have anything in the pipeline regionally or even in the Middle East with regards to what you're offering right now? It's been a few months. You could say it's a success. So is there any plans to expand?
Yeah. So actually when we launched Shariah Global Portfolios, Simultaneously, we also offered the product in Singapore and Dubai, so AE, UAE. So in these three markets where there is a significant Muslim population who needs these kind of products, we made it available for them. For places, let's say like Hong Kong, for example, less of a focus, we didn't launch it there. So the good thing is, obviously, in Malaysia, we are seeing a lot of take up, and then we're doing a lot of outreach, marketing and things like this. In Singapore, I think it's a Muslim, minority kind of country. There is still demand, so it's made available in Singapore without much marketing or fanfare. Actually, the product kind of takes up itself, and the amount of assets that it has accumulated is roughly the same as Malaysia. If you compare dollars, right? In dollar to ringgit, it's a different story, but dollar to dollar, when you really make it uniform, the average Singapore investor who invests in Shariah Global Portfolios is many times more affluent than the average Shariah Global Portfolio investor in Malaysia. So I think that just speaks to the different demographics and investor base in the two different countries. In AEs, I think our focus is a little bit more on high net worth customers, so not specifically Shariah portfolios. The take-up is okay, I would say. We haven't invested a lot in marketing over there for that product, but the focus is different. So different countries have a different focus. In terms of new countries, that's not on the program. We're not going to launch in different countries, at least for the foreseeable future, because there's still so much to do in Malaysia. So like we mentioned earlier, this year, 2025, we have more than 1 billion ringgit in assets under management. The unit trust industry is 500 billion. So we're not even 1% of the industry. We think we have a long way to go. Singapore is a bigger market. Hong Kong is a bigger market. UAE is a bigger market. So we need to reach, I would say, critical mass in terms of number of customers and AUM before we look at planting flags elsewhere. So I think that's also something lah. And in terms of new products, I would say for Malaysia, we want to really focus on what we already have. This year has been really busy. Beginning of the year, we launched crypto ETFs, so Bitcoin and Ethereum are made available on our platform. You can either invest in it through ETF Explorer, or you can put it in your flexible portfolio. So we did that, and then we launched Sharia, and then we launched ETF Explorer. So we've been busy this year in terms of new product launch. So for next year, I think it's more consolidation, more growing these different segments, because they are different base to before. The Sharia one is more Malay Muslim, which needs a different communication strategy. For the ETF Explorer platform, there's also a slightly different approach than just don't buy, don't sell, just invest for the long term, just be patient, because ETF Explorer is a slightly different product offering. So I think the way we communicate will be different as well. We'll be presenting selected ideas, we'll be presenting specific themes, not over the top, not 20 trade ideas, just more like, think about this, think about that. If you want to overweight gold, for example, you can use ETFX. So next year, I would say no new products for now. If you look at our product suite, you can do a lot with it already, from cash to managed portfolios to being more hands-on, DIY with your own investments. There's a lot.
Fantastic. Thank you so much, Ken, Country Manager for StashAway Malaysia. It was really good to get your insights on especially ETFs as well as the Shariah Global Portfolios that you guys have offered. Definitely something innovating, and we're hoping for the best for 2026 and hope to see you soon as well. Thank you. Any last words for your investors out there? Any last words for your customer base? Anything that you'd like to mention to them that would get them on board?
Yeah, maybe a couple of messages, and thanks again for inviting me on the show. So I would say, first and foremost, everyone needs to invest. I think this is not news, especially to your viewers, but I think it's time to explore investing globally. Malaysia is a great place to stock pick and to have products like ASP, but globally just presents a much better risk reward for the investor. So I think it's also really exciting if you look at new markets that you want to invest globally, and also new asset classes. If you don't expose yourself to the S&P, which has done 14% over the last 10 years, the Nasdaq, which has done 17% over the last 10 years, annualized. Or, you missed out in terms of gold because previously you just held on to the jewelry you had. You wouldn't invest through an ETF. These are all things to think about to build your future. So I think it's important that you think about which platform you choose to invest in and whether that presents you with the best exposure. I would say that, for your viewers. And then hopefully going into Christmas, there's a nice Santa Claus rally for us to all enjoy before more volatility in 2026.
Fantastic. Thank you so much for your time here today. That was Ken from StashAway Malaysia, the country manager. Hopefully, they'll be taking your investments global. My name is Wanizul Islam from KleverStock, and we'll see you again shortly.
Scan now and download KleverStock, your trusted source for market insights.